very, very invested in our community.
It's wonderful to be here.
This is Vinny Chopra and also my good buddy Beau and Steve. And we are so happy.
It's amazing what's going to happen. So, we ramped up to do the show, and we got a lot of hype about the guest today, so I'm excited.
Oh, I know. So excited to come live to you all. You live 9:30 every Friday. How to take your business to the next level. All right. We are back. We are back after a couple of weeks, guys, taking some vacations. And brother Beau was there in Mexico with his lovely wife and had some great fun. Thank you for joining today. This is Vinney and Beau Show. We come live to you most all the week for Fridays, unless we are traveling or we are going on some, seminars or webinars or travel vacations with the family. So thank you, Beau. How are you, brother? Good to see you.
I'm doing well. Yeah, Mexico treated me really good. It's nice to get away and just kind of let things slow down because we're in a constant. We're always just hustling because business is booming and right before you go to vacation, why do you get more busy, right? That's always the way it happens. You can't help it. It's like my business like tripled in the 2 week span of when I was going on vacation. I was like, oh, I gotta. That's why it's important to have systems in place so you can handle these things when they go on vacation. Just really made me think that I need to hire the right personnel to help me grow because it's just like I was telling you earlier, one of my borrowers I think just gave me 14 loans. Like that's one borrower, one borrower out there. And I'm in the business.
Hooray!
Yeah, I'm in the
Yeah.
business of solving problems. That's what I do. I solve money problems for real
Yes.
estate investors and business owners. And even with the economy, uncertainty, it's amazing right now because you're seeing still a significant amount of people not on the sidelines that are actively buying properties, renovating properties, moving money. So I think it's there's no difference now than 4 months ago for me or 5 months ago. It's the same. I think there's just different opportunities right now, and it's pretty exciting times. I think right now is when people need to be more strategic, but people are out there buying stuff and repositioning and getting ready for the next wave of opportunities.
Totally. And like we were discussing before the show, you had some good notes. I mean, we should talk today about how do you think, the market is shifting, and is it going to be the interest rates going higher and higher? As a matter of fact, my one of the lenders told me yesterday, day before, even the rates have come down. It's amazing, and we could do interest only, 5 years interest only. He was promising, and then few other things. But the other part is, what are the one percenters doing differently? We'll talk about that today also. Top things investors should do in this market right now on the Wall Street or on the Main Street. We'll talk about that. And then what's one investment that you're most likely to excited about today? I know it's a real estate show. I just looked at the stock market. Even corrections are happening and all, but Dow is up today right now, brother, 257 points Friday. And the blue chip stocks are really going to recover very well because those are the ones they've been depressed with the market and so forth. I know we are not giving any financial advice. We want to make sure everybody knows who is watching us now or the podcast later on when we make it there. But again, there are opportunities out there on the Wall Street, on the Main Street, in crypto even. Oh my gosh, I was talking to somebody yesterday who is so big on blockchain and crypto, because as you see now, the Bitcoin and the Ethereum is going up, slowly up and all that. I lost my shirt in Luna and Celsius and everything, but there are great things to be gained also. And the big thing also is that when there is lot more uncertainty, like in 2008 and 9, that's when the millionaires were made. I mean, that's when I started my business, 2007 and 8. And that's where you have the opportunities. You got to, you know, look for them, and you got to be looking around to find those deals. Like in real estate, for example, I got a really great deal coming up here in Florida, and I'm very excited about it. Monica and I talked about it a couple of days, and we are doing due diligence and all. We would love to purchase, that multifamily if we get it. There are a lot of people out there. So, what are you finding in the lending field right now? you think
Uh,
you said developers are also getting a lot of loans. You said,
yeah, you know what I'm finding now is that a lot of really high caliber borrowers are starting to come my way because they want ease of transaction. They don't mind paying a little bit higher because
uh
they,
huh,
what's the point of waiting 4 or 5 months for a bank when they can come
hmm
to me and I can make stuff happen in a couple weeks? So I'm starting to
hmm
see a lot of that where people are like, you know what,
hmm
I don't mind paying a point or two higher on rate to get done
hmm
because it's the velocity of money. In the big scheme of things, a couple $1,000s extra in interest
yes,
means a lot to them when they can make hundreds of thousands of dollars of profit by moving the money quicker. So we're seeing a lot of that. Um, and just navigating deals. Like I said, I have one guy that is, I mean, he's just buying it. He builds and buys, builds and buy. I mean, he's got hundreds of properties. So it's interesting to watch him navigate. But he's owned land for a long time. I think the big key takeaway on all this stuff, Vinny, is that with crypto and all this stuff, we know it's going to be around, right? And people
yeah,
overreact, and the
hmm
people, you're only going to lose if you sell. If you sell your stock, and maybe it's advantageous to sell because you need the write off for the year. But if you
hmm
just weather the storm, like I bought some stock in a company that does Bitcoin mining, and
uh huh,
I just dabbled a little bit with it because I'm still
hmm
learning,
hmm
the whole market and what it, blockchain
yes,
technologies and everything.
yes,
And it got
yes.
hammered. But I think, I'm down a couple grand because I only put a couple grand in because I don't know the space. So I'm only dabbling in it. So I get a better
Uh-huh,
understanding.
uh-huh.
But like, who cares if you're down a couple grand? Because if you hold
Sure.
this for 5 or 10 years and a Bitcoin really goes to 100,000 or 500,000 a share,
Mhm,
you're going to be rich. So I look at
sure.
everything as a long-term investor. Like developers I know that own lots of land, they know
Yeah,
like, hey, there could be a slowdown in housing starts, but they don't care because they have the bandwidth to hold the land, and
yeah,
even if it takes
yeah.
a few more years because of slow time. So the point is that the only way you really get hurt in real estate is if you have to sell. If you can weather
Yeah, yeah.
storms, you're not going to get hurt in real estate unless you bought a property and you found out later it's contaminated land or something like that. But these
Yeah.
cash flowing assets or even non-cash flowing, like this guy land banks, he owns tons of land, but he knows he can buy it pennies on the dollar, and then he can
Mhm,
add value to it by developing it, finishing the lots, and then building homes eventually. So he's not
mm.
concerned about moves in the market because he's not going to need to sell today or tomorrow. So that's the real point.
Gotcha.
It's like your rental properties, as long as they're cash
Uh-huh.
flowing and paying your debt, you're good. So the more rentals you have, the more income properties, the more investments you have. As long as you have a little bit of reserves, you're not going to get hurt. It's the people that don't have the reserves that need the money that get hurt. And that's what happened to me in 2007 is I had no
Mhm.
reserves and I didn't have the skill set to go, well, what could I do to increase revenue on these rental properties I had? Like if I would have known now, I could have done co-living space. I could have rented by the room. I could have done corporate furnished rentals. Instead, I
Yeah.
didn't have those tools, which now I
Yeah,
do, years later, because we all evolve and we realize that there's always solutions to your worst problems. So that's what I'm working
surely.
on now, and just growing the business, Vinny. It's just
Yeah,
constant
that's
work. Like we all said, you have to constantly, you got to work, you got to figure out, like, I was kind of frustrated just because I'm not growing how I want, and I'm getting bogged down.
hmm
There's bottlenecks in your business, right? What are those
hmm
bottlenecks, and how do we fix those bottlenecks, right? Is that me
hmm
hiring a contract processor to really to move it to the next level? Because there's so much business out there. Really, there's so much equity in real estate that people have,
hmm
and they're sitting on all this debt equity. And so what I'm helping a lot of clients do right now is, let's get this debt equity out of your properties, and let's go make
hmm
more. Let's make more, a higher and better return, because there's no point on sitting on $5 million of unlevered real estate. You got to lever that.
Sure.
You got to leverage the real estate, and you got to buy more cash flowing assets, and you're going to be good. And maybe we go through a little bit more of a tough spot for the next year or two, but at the
hmm
end of the day, if they slow down building, there's more demand on rental housing needs, which
Yep.
means we're going to be just fine. And so the
hmm
people that own the doors will become the most wealthiest people on earth, as history always repeats itself in that realm. Is that the more real estate you own, you're going to do just fine. So, I mean, I think that's just the bottom line. It's like weathering the storm, being more conservative on your offers right now, and only buying
hmm
really good deals. And if you do that, who cares what happens over the next 12 or 24 months? Because people are going to still pay rent. People still have to pay rent. They're going to live. They need a place to live.
So true, Bo. And by the way, we did close on that Hilton Garden Inn, our sale. Sold it for 12 million. I think some of the followers might know. We bought it for 6.3. We got 7 million sitting in 1031. Now we are purchasing two hotels. We are both under contract, and we'll be able to put that 1031 plus some more investors and our own equity money into it. We're even thinking third hotel. Why not? You know, to put that into one, change it into three. So opportunities will be there. Even multifamily, right? If we do the underwriting conservatively, make sure that the terms are strong and the cash flow is coming, and there is an upside to the equation, there will be opportunities coming. I know we have talked about foreclosures and other things which might be happening, but from the brokers, what I have understood is the sellers' expectations are not going that down yet. As we were expecting in about 6 months or so, it might be another 6 months or maybe even next year. But you got to be in the field to really be talking to brokers and so on. Yeah.
I think by November or December of this year, we'll have a good indication of what's gonna
hmm
unravel. I think that's going to be the time where I mean, transactions have definitely slowed down in the residential
hmm
space. We know that.
Yep. Yep.
But a lot of people are saying, God, this is awesome, because it's a great buying time, right?
Yeah.
Less
Yeah.
buyers out there. So it's
Yeah.
all perspective, Vinny. It's all perspective. Everything we do is mindset. There's no other. I've was hitting my head against the wall, and I realized that everything comes down to mindset. There's
Yeah.
no other,
Yeah.
there's nothing else besides the mindset, because, somebody could be 100% buying right now, and somebody could be 100% not buying. And
Yeah.
at the end of the day, if you look back 15 or 20 years ago when I bought my first property, 20 something years ago, do I wish I
Uh-huh.
still own that property today? Of course. That property I bought for 350, 325 is worth $1.3 million now. Why didn't I hold that? Right, right,
Wow.
right. So
Yeah.
prices aren't going to go down right. Like, prices aren't going to go down, meaning we might have a short term where prices dip, but over the next 10 years, do you think the house I live in today is going to be worth more or less than today's price, right? Today's worth X. I can almost guarantee, unless
Yeah.
this house burns down, that it's going to be worth more in 10 years,
More.
and probably double, maybe 2.5 times what it's worth today. So
Yep.
that's
Yep.
that's the indication, right? And anybody who's locked in cheap debt on
Yeah.
real estate is very fortunate, right? Like, if you have 2.75 on your mortgage,
Yeah.
you
Yeah.
don't.
Rental. That's what I got, by the way. 2.5, and primary residence, I think 2.5 or something. You're right.
Let's
Yeah.
let's
Yeah.
dive into, like, what the one percenters are doing, Vinny. Okay, so
Yeah. Let's talk.
here's kind of my thoughts of what the one percenters are
Yeah.
doing. That the one
Uh-huh.
percenters
Uh-huh.
are typically taking advantage of tax benefits and breaks. So meaning
Mhm.
they're going in and they're understanding concepts that the average Joe doesn't understand. Hence, cost segregation, accelerated
Yeah.
depreciation. Why is it
Yes.
that these real estate people continue to grow their net worth day in and day out? It's because, and why don't people like that pay taxes? Because they know how to accelerate depreciation via cost segregation. And so, like, Vinny, if you didn't have to do cost segregation, if you didn't do cost segregation, and let's say you make a couple $1,000,000 last year, okay?
Mhm. Mhm.
2021, you made X millions of dollars. How
Mhm.
much would have you had to pay in taxes, right? 40% of that,
53%. Oh
53,
no,
50.
no, 53 counting California tax, brother. 13.3 plus the 37. It's 53%. Yeah,
Right.
it's 53%. Yeah. Uh-huh.
And through accelerated depreciation,
You
you're
could knock off at least 50%. 50%, if you're a real estate professional, of course, but if you're a member of the LLC in hotels, then you are able to take it as passive, active losses, by the way. I did some more studies and more digging around. So for the LPs in hotels, Bo, it's the same thing. LPs get passive losses through hotels also, even though hotels have more depreciation value, because of what we find is these furnitures and all that in every room. So that's personal property, they call it, right? Which is written off in 5 years and 15 years. So cost segregation, depreciation is huge, humongous. And of course, if you buy the property in December, 1st of December, and you don't show much revenues, but you have a lot of expenses in the LLC, and you get the depreciation for the whole year, by the way, because even though you close the deal on December 30th or 31st, it counts as if you bought it on January 1, any real estate. So you get the whole year depreciation, even though you made that late. But the exciting part is if you buy late in the year, you don't show revenues and expenses. So if you don't show that much profit, then it helps even the investors even more. I was discussing that with a CPA. Yeah, my friend.
so the real difference between this asset class is that a
Uh-huh.
hotel is considered an active business or a business, and it's also got furniture, fixtures, and equipment, which has a different
Yes.
category of deductions. So even as a
Yes.
limited partner in a syndication of a
Not
hotel,
limited. Yeah, not limited. That's the key factor, because if they're member of the LLC, I think that's what I've been trying to look
yeah.
into that. But for LPs, it's a passive loss. But for the for the members of the LLC, if you don't do syndication or they are the general partners, aha. So if the investors are $1 million investors, $500,000 investors, they're general partners, then you are able to have active losses. Yeah, yeah, yeah.
So
Again, we are
really,
not CPAs. We are not
right.
CPAs, guys.
This is
We are not
this is not
attorneys. We just,
this is
yeah, it's not
this is for
advice or
entertainment.
anything.
But if
For
somebody was,
entertainment only.
yeah,
Yeah.
but if somebody was listening
Yeah.
and they
Mm-hmm.
were a high net worth, big earner, well, big
Mm-hmm.
earner, not high net worth, big earner, active
Yes.
income, their best bet would find a really good CPA and maybe potentially invest in a business like a hotel and
Yeah.
find an
Yeah.
operator where they could partner on the general partner side by coming in with
Yep.
500 million, 2 million,
Yeah.
and then
Yeah.
they could then take advantage of huge tax write-offs potentially. So we're not CPAs. We're just kind of
No,
we learn this stuff because it's you know
it's of
people
importance. Yeah.
is
People should know.
this is just as important as investing in the deal, is knowing, like, what are the advantages of the deal. Because
You mentioned something, Bo. I just talked to Terry Judge, our friend, right? Who
hmm
is the president, CEO of the Core Solutions this morning. I'll be on his podcast next week. But the thing was, we were discussing also disposable. So anything we dispose of when we renovate the apartment buildings or even in hotels, we call it PIP. That's property improvement plan. So whatever is thrown out, there is a value that you could also deduct. It's called
mm,
disposable. Yeah, yeah, yeah. disposable side, a lot of people don't know that, guys. You got to look into that. And then when you put new stuff in, you get to depreciate that too. So for cost segregation for the bonus depreciation, which is 100% this year until December 31st, 2022, this is the year you get 100% bonus depreciation. Next year, you get 80% of the total. Then the year after, 60% and so on. But the key thing is that many people don't know even that when you throw away stuff, appliances and this and that, and, like in hotels, you throw away so much stuff, right? Because you want to get brand new renovations done and all. So you can depreciate, cost segregate that disposable, which is written off, plus the 100% of the new one, right there. But I wanted to kind of share something with our audience. Maybe they know it already. For Americans overall, the top 1% earners average 1.697 million of annual income. Now that's average. So there are people who make more than 1.7 million, let's say, and there are people underneath, right? So usually you only need to make $550,000, let's say 546,000 to be in the 1% of the people in America, to be in the number one percentile of the earners in America. Other thing I was also thinking, maybe you and I can talk about, what are their habits? I wanted to find out, what these rich, ultra rich people, what are their successful habits? Oh my gosh. And again, I did some research. They wake up early. Wow. They wake up early. You and I do, but both of us don't check emails first thing. They don't check emails first thing. They eat healthy. They exercise regularly, and they have primary goal. They have a very good focused goal. And then, of course, they write down their goals. Wow, writing them down. That's one of their habits. And then, of course, keep a daily to-do list, which is, all successful people do and should do, and believe that time is money. And believe that time is money. And again, we are not really into any kind of advice here or anything, but I was thinking, okay, what should be the 12 best investments right now? And Bo, what do you think they are on the Wall Street? On the Wall Street.
Okay. Well, I was going to say number one investment is invest in yourself, but in Wall Street, I would probably look at what's battered the most right now and has the most upside, right? Because there's always overreactions, corrections that are excessive, and that's when you buy. Like when COVID first hit, I was about to buy stock in a company that they own and operate retail strip centers, and everybody was like, "Oh, retail sucks," and their big thing is their anchor tenant's always a grocery store, and I was thinking, God, this is perfect. It's gotten hit like 70%.
Yeah.
And everybody needs grocery stores. And sure enough, like I could have bought it at like $4 a share. It's like $26 a share right now. Right. So so I think the people that play the overcorrections,
Yes.
just like in house flipping in 2008, 9, 10, 11, you were buying stuff pennies on the dollar. I mean, that's when you make the most amount of money in the shortest time. Same thing with multifamily. When people back then, multifamily wasn't like as sexy as it is today. Now everybody's a gosh darn multifamily syndicator, right? The problem is that most people aren't going to be able to weather storms.
They will not be able to. No, 1,000% more in the last 3 years. There are 1,000% more syndicators, young ones, and so forth. And who don't have the bandwidth and track and everything. But you're right. But the key thing is that, I mean, we got to, even right now, I say the same thing. You got to look at what's the upside. I mean, underwrite, everybody knows that, but you got to be very pessimistically optimistic. You got to make sure that you're not assuming so many big rent increases and, all those things, because and all those things. Again, the 12 best investments as of Google, it came out to high yield savings accounts. A lot of people who want to be safe, right? Certificates of deposit, CDs, again, they don't pay you much, but that's what money market funds, of course, government bonds, corporate bonds, mutual funds, index funds. I love index funds, ETFs, actually, exchange traded funds. Always, I love those. But the key thing is there are some great blue chip stocks. I'm not saying any advice, guys. Again, because I know some circle of friends who are into stock market, they were saying, Vinny, Meta, Facebook, where they're going with the metaverse, Google, the Amazons, and then the Microsofts, and all these big Apples and all that stuff, and Teslas and all, that they're going to rebound back faster, and they are blue chip stocks. So they've been battered right now because of all these, depressing uh, inflationary matters and all, and money printing and all that stuff. Uh, what else can we talk about, brother? Let's see.
Yeah, so I think the 1%ers, and I think that's misleading because 1%. There's a lot of people that make 5 or 600,000 a year that aren't what I consider 1%ers because they just make high income, but they don't know any of the strategies that would make them really wealthy. Like, they don't have any deductions, they don't own any assets. I think the real true 1%er, like if we carve it up, isn't people that make a certain amount per year. It's a net worth or a cash
Network,
flow,
yeah,
right? Like, because
so
net
true,
worth and cash flow are the most important things. I think cash
so
flow,
true,
honestly, is the
yeah,
most important thing. If you have, let's just say your total expenses are 25,000 a month, but you have 100,000 every single month coming in, you're
yeah,
always going to have a $75,000, give or take,
hmm
extra liquidity to reinvest. So to me,
yeah,
cash flow means the most because you always have a surplus of income coming in, and I think that's the real key. Once you get to that point, then you make more strategic moves. Like as you get older, it becomes more of a net worth game, I think, because then you can convert your net worth into different long term streams of income. But I am never been a stock person, so I think that
hmm
people starting out with not a lot of capital, the stock
yeah,
market's probably
yeah,
not the best place to get the highest and best safest return. I think it's always been real estate would be the
sure,
easier route to go because you can leverage it. I think the one
hmm
percenters are studying tax laws. I think 1%ers are buying assets on a continual basis. I think they have a little bit better savings. I mean, they allocate their money differently than the other group. I think people that take their money and allocate are the ones that are going to become wealthier and wealthier over time.
Surely, surely. No, again, I always say that when there are, and I mean, from Nebraska, right? Berkshire Hathaway, the whole, organization. The big thing is that when there is some unrest, when there are opportunities, they come when there is more un, people's sentimental, let's say, they are kind of getting a little bit more uneasy is when the time comes. Again, we are not giving any advice, but the thing is having the capital ready. Bo, what I found talking to so many people around me is that there's so much liquid dust is there. People have so much money, the funds have so much money. Of course, look at what Blackstone is doing, buying single family homes in big chunks and all that stuff. So there is cash out there, and everybody who can really accumulate cash and then be ready for the right opportunity will be the big winners. you know I
As
know my
always,
business is in syndication, and we are just crushing it. I mean, we just raised almost 26 million in just last 2 months and deployed it, and I have 14 million in the hotels right now. So that's why we want another hotel to three hotels to get this squared away. Yeah, yeah.
it's money flow, right,
Money
Vinny?
flow, yeah, yeah,
Money attracts money. The energy of money. It's
yeah.
that's the real currency, right? It's that's the power of a good syndicator. It's really just finding
Yeah,
opportunities and then letting the money flow to that opportunity and creating wealth for yourself and creating wealth for all your investors is the key.
See, that's the key part. I mean, we are doing these deals where our investors are great winners because syndicators like me and others, they give 70% of the profits and the equity, even 80% in the first couple of years, to the investors. So investors just come in, with handshake, and of course they look at the legal paperwork and the deal and the track record and all, but they are the big winners. It's a win-win-win situation. And of course, when we do renovations and things like that, then our vendors win, their companies win, then the labor wins, and the material is used, all that stuff, right? And then all the different economies, take a boost, with that.
We're coming up on our 30 minutes to round
Yes,
out
yes,
this
yes,
to
yes.
round out this conversation.
Yeah. Uh-huh.
What's the one thing that you are doing differently today that you're most excited about, like over the next 12 months? What do you see like?
To be
Yeah.
very truthful, I've been really looking into some startups. I know my cybersecurity company is doing so well. In 2.5 years, my partner Anshu Bansal, who's a very good friend and brother of mine, he just came back after 2.5 months hiring engineers all over the globe, and we are able to deploy our cloud defense in all over in USA, abroad, in India, in Singapore, in Europe, of course, then in Saudi Arabia, in Dubai, cyber cloud defense, right?
And
Which is
what
amazing.
stage is that out? Are you guys going to go raise institutional capital at this point, or are you
No,
still
we have
bootstrapped?
so much money. We have so much money. We only raised 1.3 million, and then some people who gave us businesses, they wanted to give us millions also. So we just gave them certain portions. So we got about 4 or 5 million extra sitting in the pond without even Series A. So we have
So
not even gone out yet.
so,
Yeah.
but your plan is to then Series A, and then you're going to have, like, after you execute the plan, then your valuation. So when you go Series A, what's your expectations for that valuation at that time?
Maybe half a billion. I'm just taking some number out because we know that we are worth a lot more now. In 2.5 years, we have built the right product, and it's a darling of our companies that we are deploying in. That's my cyber cloud defense thing. But the other one I'm really, really excited about is the metaverse, the NFT metaverse with gaming. And that's my next startup that I'm, holding hands with my brother and other partner. And then my Scarlet Books, which is you and I talked about, which is going to be the QuickBooks alternative, or maybe side along, that's my other one, which I'm very, very excited. Of course, Bitcoin mining. I know you mentioned about you dabbled into something, and I'm doing it now with my partner who has done almost 100 million. He's deployed in miners, and we have 5 plants through USA. Our cost of Bitcoin mining right now is $14,000 to $15,000 per coin, which is not bad, as compared to some smaller miners. They have stopped, actually. A lot of miners have stopped mining in Europe, as the reports told us, because of cost of power has gone up and everything like that. But our contracts are with the different power producers like hydro energy, solar energy, and then of course the nuclear plants in Ohio, all that stuff. So that's why our cost is low right there. So we are actually giving returns. We are not saying that your money is gone down. We are actually giving returns of 1.5 to 2% right now, but we have given as high as 5% per month also. So again, we are not selling anything, guys. I mean, if you are interested, please reach out to me, vinnychopra.com. You could just click on Invest with Vinny. Then we'll have a meeting with you and kind of go over all the details and all that stuff.
So
Yeah.
when these businesses hit, you're going to be a billionaire.
Hey, that's the plan, bro.
Hundreds, at least hundreds of millions of dollars.
It is. It's a big game. It's a big game. The technology is changing. Web 3 is going to change the world, just like internet came. right? Internet totally changed the world, and that's what we're going to see in the metaverse and the Web3. And I'm going to bring my partner in. Actually, today he was busy, but hopefully one day we'll bring him on, you know, Craig, and he'll kind of share the whole vision. I know I did do some research. Facebook changed their name from Facebook to Meta, and Meta
Hmm.
is the first part of metaverse. And I also know $15 billion they're spending right now. Facebook is big bucks, right? 15 to 18 billion each year. They are spending in R&D and metaverse and how it can be formed, all that's technology and everything. So we are really happy that we are also in the same direction. We love Google's and the Apples and others, to really also come in the forefront, and then we'll be following them because it's going to be open source, and then everybody will be collaborating and putting the plugins.
What will you do? What will you do when one of these companies sells, like your cloud events company, for example, and you get a, you know, I mean, you're used to making money, but this will be like a mountain of money that you can go swimming in. What would you do? What what would be the number one thing you would do with that money? Obviously, your
I,
family's going to be well taken care of, but what would you
yeah,
do? You know,
I
if you
would
were to
say
put
some
charity
very
wise.
special charities. I'm so glad you said it. I'm doing a big initiative about carbon. Oh my gosh, what is it? Zero carbon, but there's a different word for it. I'm launching it with Neil Baba, my very good friend Neil Baba from Fremont, California. He's designing the whole thing. He and I met together. So we're going to take a big initiative. I know Charity Water is going strong with Brenda and you and I. So we're going to relaunch that also with the hand pumps and all, of course. But this zero carbon, planting the trees, is going to be my next big initiative, and we're going to be promoting it all across the globe, actually. And we have found the right places where they're able to not take any money out, even match the monies that people donate, and 100% it becomes 200%, and they plant trees in Canada and USA. So that's something is coming up soon. Thank you. But I think, the big thing is our lifestyle will stay the same. We might go in private jets here and there, something like that, go more luxurious, and but we are same people. Bo, it's such a pleasure, brother. Such a pleasure to have you back again. Yeah.
Yeah, and I think it's to be noted. We got to get going here. I know that, but
Yeah.
it's always
Yeah.
to think big and dream big, right? Like that's the first
Yeah.
step.
Totally.
Like,
Totally.
you would have never guessed when you arrived in
No,
from
it's
India
$7.
that
It's
now you're
$7.
talking about these companies that are valuations of couple $100 million, that you're involved with, and also too, you take certain amount of risk by investing in young uh, companies, right? Like not every
Yes.
young
Yes.
company you invest in is going to be a success. There's some of them are
Totally.
going to fail, but
Yeah.
the venture and the seed capital type of investors, they, maybe out of 10, two or three hit, right? And then
Yeah.
one's like a mega. So
Mhm.
it was interesting. So very cool. I think
Let's
let's wrap it
that's a
up.
good
And
way to let's wrap it up there, and we'll see you next week, Friday, at 9:30 Pacific and 12:30 Eastern. Remember also to follow me on a great show with Walter Amarillo, which is come on Thursdays, every Thursday, 8 a.m. Pacific. Abundance Mindset with Vinny Chopra and Walter. So that's my two shows now. One on Thursday, brother, and one on Friday with you.
cool. Well, we should get him on the show on
Yeah,
next Friday or one of these
I,
Fridays. I
I
haven't met him
will.
yet.
I'll bring Walter on. Yeah, that'll be fantastic. Thank you again, everybody, for watching us. We appreciate you. Give us some likes and comments and share these episodes. This also becomes podcast for Bo and myself. And we'll see you next week. Please come and join us. Thank you so much. Let's play this out right here.